What's going on, guys? It's Mario Armani, your friend and realtor from Armani Realty, and today we're going to talk about mortgages, which is one of the most important things in the home buying process. So today I'm going to be visiting the offices of 3 different mortgage brokers where they're going to talk about the key differences to the mortgage broker process. So I'm actually here on site at the offices of Mortgage Savvy. So let's go inside and let's get the party started. Let's go. Alright guys, so we're here with Emily from Mortgage Savvy. Emily, thank you so much for being part of the video. So for everybody at home, can you explain the major differences between the bank versus a mortgage broker?
The main difference between a bank and a mortgage broker is that a mortgage broker has the options to work with many different lenders. So we work with 40 different institutions, opposed to just working with one particular bank where you're really limited to, their products, their rates, their services. Not everyone fits into the niche bubble of the
Exactly. And that's very important because like not everybody's exactly the same as the other person. So flexibility is definitely key.
Exactly. Yes.
What are some other differences?
Well, when we do an application for a client, we do one application, and with that one application, we pull their credit, we collect information, and we use that one application to apply to all of these lenders. Whereas, let's say you were walking into BMO, they're going to do one application. You walk into RBC, they do one application, and that's a credit pull each time.
Exactly, which it does indeed lower your credit score and making it a little bit tougher for you to get approved. So before I let you go, one of the key things that I notice is that you guys have the flexibility of being able to get a hold of you, whereas the bank, you're kind of working on their hours. Can you touch a little bit about that?
So we're not a 9 to 5, as I like to tell a lot of my clients, and we work around the clock like realtors. So oftentimes, we'll have our clients call us on the weekends or in the evenings, and we're really there to be with you during the process. So we find that helps a lot of our clients where they don't feel limited. Oh, I have to call my realtor or my broker before 5 o'clock.
So you're gonna get bothered 7 days a week, just like I do.
Yes.
I shouldn't say bothered, I love my clients. But anyways, Emily, thank you so much for clarifying some of this great information for everybody at home, and we're gonna go to mortgage broker number 2.
Thanks,
Let's
guys.
take care. All right, guys, stop number 2. We're at the offices of Marco from DC Financial. So let's go inside. Let's see where he's at. All right, guys, so we're here with Marco from DC Financial. Marco, thank you so much for helping us out in doing this video. One of the topics that are very important to me is that if you can explain to everybody the difference between a soft approval and a hard approval.
Thanks for having me, Mario. Great topic. A hard approval is when you've actually gone through the motions of the approval process with a mortgage broker or bank. You've given all your documents and they've reviewed it and then provided you with a hard approval. Soft approval is more when you've given a partial information or not all the documents to your bank or the lender, or even when you've gone online and done an application and got pre-approved within seconds.
Okay.
Those are soft approvals.
So in other words, nobody's actually reviewed the documents. You got an approval based on information that you verbally gave or let's say submitted, but no one's actually reviewed it. So in reality, it's not a real approval.
Exactly.
Okay.
Because when they review it, that's when the problems come in, right?
Exactly.
Income being one of the biggest issues. So some people may say they make $80,000 when some of that's coming from commission, some of that's coming from bonus. These are all very important to the bank.
And it might be, for example, that they only made $60,000 or $65,000 and then the numbers don't work, and then you go ahead, you put in an offer, you are in the 5-day financing period, and then you submit it to the lender and the lender says, no, you're not approved.
Exactly.
So you wasted everybody's time, and it's wasted your own time as well. So for everybody that's watching this video, make sure that when you get an approval, get a hard approval, submit all your documents and do it the right way. So anyways, Marco, thank you so much. Appreciate it.
Thanks, man.
And let's go to the next one. All right, guys, last stop of the day. We're here to see Alexandra Micheletti of the Mortgage Center. So let's go upstairs and let's find her and see where she's at. Hey, how's it going?
Hi.
All right, guys, third and final stop. We're here with the lovely Alexandra Micheletti of the Mortgage Center. Alexandra, thank you so much for being part of the video.
Thank you, Mario, for dropping by.
No problem, no problem. So one of the things that I want you to talk about is how every single buyer they have a different situation. Can you talk a little bit about that when it comes to mortgages?
So definitely each client is different. We have salary or hourly employee versus self-employed.
Okay.
It's very different how the lender or the banks qualify each and every one of these clients. Especially self-employed could be a bit more challenged qualifying with a bank. However, we do work with 50 different lenders and financial institutions that do work with self-employed people, allowing them to qualify for a mortgage with a little bit of a higher rate and a lender's fee.
Okay, so let's talk about rates. I think that's very important. A lot of the times people are on the internet and shopping around and they see these 2.7%, and then I'm sure they call you and they say, well, my buddy just got 2.7%, or online I saw 2.7%. How does it work when it comes to rates?
Definitely rates, it's very related to how good or how strong your credit is.
Okay.
The higher your beacon score, the higher would be your rate as well. So I would suggest definitely to keep an eye on your credit report and work really closely with a mortgage broker that could advise you on how to improve your credit.
So in other words, for all those people that don't pay their bills on time, you have to pay your bills on time, because one day it will affect you when it comes to going ahead and getting a mortgage. So
absolutely,
pay your bills on time if you're watching this. So anyways, Alexandra, once again, I'm very thankful that you helped us out clearing up some of these points. And for everybody at home, I'm gonna plug everybody's name below, all these wonderful people who was part of this video. And if you need a mortgage broker, reach out to any of them. I highly personally recommend each and every one of them. So reach out to me, reach out to them, be happy to help you. And that's it, guys. Thank you so much for watching. Always very grateful for all your support, and we'll see you soon.
Thank
Take
you.
care.